So hello everyone, this is a Bitcoin review for the private channel. I don't know if we'll touch on the S&P 500 or not, but let's start with Bitcoin. So you can only see the big picture from a distance. So we'll start with the monthly candles. What do we see on the monthly candles? Here I've expanded it to full screen. According to formal indicators, well, we can check or not check, but the previous month, June, closed below the 50-month moving average. And overall, this suggests that in the current or the coming months, there is a high probability that we will see a further move down with a target zone roughly around $40,000. So basically, that's the area of the 100-month moving average. It's the red line on the chart. At the same time, we have strong oversold conditions. But again, as we mentioned in the previous review on YouTube, this oversold condition is not a guarantee that the market can't fall even lower. At the same time, there's nothing stopping us from reaching either the middle of last month's candlestick or an important technical support level. Look, our February candlestick dropped, I think, to $60,000. I believe it was exactly that. Yes, 60,000 was the minimum. Then there was a strong rebound with stop losses being triggered above that candlestick, and then we broke through powerfully again and went down. And now we can pretend to be clueless, that is, act as if we've supposedly reversed or maybe even actually reverse. Well, at the very least, there is a reason to test the closing point of the February candlestick, which is $66,973. And this does not contradict a deeper decline. That is, we might see a move. Let's draw it. So, somewhere around here and then further down, right? But it's also not forbidden. In principle, it's not forbidden to go down to the base of last month's candlestick, which is around $74,000, and to play out the same combination as we had with the February candlestick. That is, a huge drop, a rebound to the opening point of that candlestick. But not a single candlestick closed higher, and these are monthly candlesticks, and then the downward movement continued. Considering that such a deep rebound upward has already happened, well, let's say the chances that we will go exactly to $74,000 are not very high. So here, you need to watch whether, for example, the candlestick for the current month, July, closes above 67,000 or below 66,973. But to test this level, yes, as an important technical one, well, in general, the situation, so to speak, is conducive to it. It indicates that the probability of this is high. At the same time, pay attention. Here is the important range in which we stayed, I think, for 8 months. Let's see, we entered it, let's not count this month, and stayed in it for 1, 2, 3, 4, 5, 6, 7, 8 months, and only exited on the 9th. So in this range, accordingly, here we are now, right? We can stay here for as long as we want, right? So, well, it doesn't matter. It could be a month, 2, 3, or it might not be long at all. That is, we might test 67,000 now and then continue further down. But overall, the situation actually allows for the scenario where we not only go to 67, but also to 71,280. Why? Because here we spent 8 months fluctuating within this range, repeatedly touching both the upper and lower boundaries almost every month, given that its amplitude is about $13,000. All right, we've dealt with the monthly candles. So overall, they indicate a decline. The 58,740 level was broken. That's the 50-month moving average. But due to this structure here, yes, this one, we could still get stuck between the levels of 71,280 and 58,740. But the key magnet right now is $67,000. Well, it would make sense to test this level even if we continue to decline from it, which is what I personally expect. So we've dealt with the monthly candles. Now we move on to the weekly candles. Here I'm expanding it to full screen. And what do we see here? On the weekly candles, we also see an interesting picture, and it's interesting above all. Well, let me really stretch it out. Here are the weekly candles. It's interesting from the perspective of this weekly candle from June 29th. Notice that the previous week, the one before it, closed below the 200-week moving average. The candle that opened on June 26th engulfed this decline, while also setting a new yearly low, consolidated above the 200-week moving average. And after that, all attempts to break below the 200-week moving average, in other words, at least over the last 2 weeks, have been unsuccessful, right? That is, we pierced the 200-week moving average with the wicks, but in the end, the candle bodies always closed above it, each time with a higher weekly high as well as a higher low. And this in turn suggests that a decline into this area is likely. Here I adjusted it a bit, snapping the level to the close of this green candle. That's $65,746. Yes, we approached it, well, almost right up to it. We had 65,600, so we actually missed it by just $146. But we have other targets as well, right? Look, first of all, with some allowance, we went to the middle of this red candle, which was pulling us back in February. Actually, that's not true. It wasn't February, it was June. I thought it was the February candle, but it turns out it wasn't. In June, yes, it pulled us back here to a new low, somewhere around 59,000, and we more or less tested its midpoint, though with some stretch. So, if a higher move is expected, then its technical target zone is the opening point of this big red candle. That's about $73,700, which on the monthly time frame matches up perfectly. I just switched over for a second. There you go. This matches the opening point of the June candle, yes, the monthly one. Everything is extremely clear and visual. Also note that the gray zone is an untraded area, meaning the market passed through it without much trading. And here it is, the turquoise zone, Tiffany color, the color of Quant Fury. This is a strong mathematical growth target formed in the range from $70,600 to $73,130. Well, approximately, right? So the weekly candles are indicating growth. Despite the fact that Monday started off not very cheerfully, that is, with some kind of decline, and the monthly candles overall indicate a downward trend, they still allow for this growth. I explained why. Now let's collapse all this, shall we? Yes, and the PP indicator, meaning the overbought oversold indicator, is still pointing upward for now. The price is rising, the highs and lows are increasing. Well, in a sense, that's a positive trend, right? Now let's take a look at the daily candles. You've known me for a long time, and you know that I'm not inclined to convince myself of something that's not on the chart. Even if right now, I have longs on H-bar, which is Hedera Graph, and on Dogecoin. Right now, they're in the red for me. I wouldn't say it's a big loss, but they're negative. I'm still hoping for growth. I don't know if it will be global or not. For now, we can only count on some kind of medium-term growth, or even just local growth in terms of weekly or daily candles. Look at what's happening on the daily chart. We've consolidated above the 50-day moving average and keep testing it, but mostly from above, right? And today, specifically, there was a retest of this moving average around the level of, let's see, $63,100 and a pretty strong buyback, right? At the same time, the engulfing of this green candle, which last time engulfed the red one, did not happen. But strictly speaking, all these engulfings in this area, let me highlight it with a rectangle. So let's say right here in this area, they don't really matter much. Why is that? Because what really matters for us is this big green candle, right? Because this candle brought us to a new closing point. It set a new multi-day high. Whereas all of this here is all within, well, a sideways range, so to speak. At the same time, the situation here is interesting as well. Look, here we set some new high on July 15th, then we pull back almost to the opening point of the green candle, and, well, we move up again, but still within the sideways range. And even the local key level of $64,042, which is drawn from the intermediate reversal point on July 6th, you can see here exactly where it starts from. It is still holding for now as well. Yes, we broke through it deeply today, but for now it is holding. And the last thing that happened, even within this sideways range, was a bullish engulfing pattern, which today we tried to reverse downward into a bearish engulfing, but so far that hasn't worked out. Accordingly, as long as the level of $64,042 is holding, as long as the candle from July 18th hasn't been engulfed, and especially the one from July 14th, which would require closing somewhere below $62,300, the situation overall remains cautiously positive and quite positive on the weekly candles. Well, with the technical growth target being around this mathematical goal, that's 67,000 or let's say 68,500, and potentially up to the 100-day moving average. And that's somewhere around 69, maybe 68,000, depending on how quickly we move up, right? But for now, I still tend to lean towards growth, though this growth is very cautious. Take note, from From the perspective of being overbought, the daily candles are in the moderate overheating zone. Yes, they've cooled off. There was strong overbought pressure. I warned you that we could exit this zone either through a downward correction or by moving sideways. So far, it looks more like a sideways movement. Moreover, pay attention. Where was the strong overbought condition? Here. Right here. It was relieved by a single day of decline on July 13th. Then there was a sharp upward move. Overall, the overbought condition hasn't been fully resolved, but in the sideways movement, it has noticeably eased. And now this overbought, oversold indicator is pointing upwards. Well, it's not that it clearly points to growth, but it's more in favor of growth than decline. That's all. This concludes the current review. Further analysis, charts, histograms, and everything else will be covered in the Telegram channel. Subscribe to the YouTube channel if you haven't already. Well, until next time, goodbye.